Hi, my name is Alex Carlucci with Gustan Associates. Going to talk to you about above 580 and below 580 credit scores. No trade lines on your credit report that are open. They're all old and they're all closed. High DTI, not getting approved eligibles with these low credit scores. How FHA is kind of tightened up. Paying discount points because when your score is really low, these banks aren't giving out rates that are free, that you have to actually pay for them. So let's talk about first above 580 is usually 3.5% down, and it's usually 46.9 over 56.9. Those are the DTI ratios that you're allowed to do above 580. So above 580, you hopefully get approved eligible. Now at 581 these days, with very few trade lines open, you may not get that approved eligible like it used to a year ago. So what you're going to need to do is maybe open a new credit card that we could offer to you, get your score up a little bit. Or you could get lower DTI, and you could pay discount points to buy your rate down to get a lower DTI. There's little combinations you can do. You can play around with it. Maybe you get gift funds. Maybe some gift funds in your account might help you get approved eligible. So above 580 is 3.5% down. If you've got light trade lines, we have ways around getting you approved eligible. If you're at 680 credit score, you're probably gonna get approved eligible 99 times out of 100 at 46.9 over 56.9. But if you only have a couple of small trade lines in your 581, and you're probably gonna get approved 3 out of 10 times. So there's some tricks to getting those approved eligible. So if you've been denied another bank, please give us a call. Now, when you go below 580, it requires 10% down. So I've seen people below 580 with 10% down get approved up to 56.9, and I've seen people above 580 with 3.5% down. They're not get approved at 56.9. So that 56.9 is a ratio that's not discriminatory about the scores. It's about the down payments. When you have 10% down FHA, it's pretty favorable on the ratios. It's not necessarily going to disqualify from going to 56.9. So it just depends why your credit's bad. Now, if you're a 502 and you're trying to go to 56.9 DTI, you're probably not going to do it with 10% down, but you might do it with 20% down. So there's different options you have when you're below 580, but it's going to require a minimum of 10% down. Now below 580 and especially below 560, your rates start getting really high. Today's going rate at maybe 4.25 FHA, but below 560, you're going to be with 10% down. You might be in a 6%. So you might want to buy that rate down to get your ratios down. You pay a discount point. Discount points are points you pay to the bank to buy your interest rate down. You don't pay it to us. It doesn't go in our pocket. We no longer charge origination points to make money anymore as mortgage brokers. We make a fixed amount on every loan. So when someone says we're charging you discount points, it's not going in anybody's pocket except the bank, the end investor's pocket to buy your interest rate down. Because at 540 credit score, banks aren't going to price the loan out for free where it's not going to cost you anything. So keep that in mind. You're probably going to have to pay points. So remember, below 580, 10% down. Above 580, 3.5% down. Remember, there's tricks to get your scores up to above 580 if you're borderline, and there's tricks to get your approved eligible if you're just above 580 but 3.5% down by adding some assets, opening a new credit card. There's some tricks we have, so give us a call. GustinShow.com has tons of blogs on this, and if you want to talk to me directly, you can call me. Go to GustinShow.com, GUSTANCHO.com, or call me at 630-915-7550. Thank you.